Today in crypto. Despite reaching a new high of $42,000 and quickly retracing to around $30,000, crypto analysts and industry execs are confident that Bitcoin could reach $100,000 by the end of the year. Although Bitcoin appears to be recovering and is trading at around $34,500 as of press time, there are still indications that the correction is not yet over. Data on TradingView shows that Bitcoin might form its fifth red daily candle in a row. As per what the analysts are saying, 10T Holdings co-founder, Dan Tapiero, opines that Bitcoin is still on track to hit $100,000 by Q3 of 2021. His assertion is based on the stock-to-flow model, which has to a large extent accurately predicted the price of Bitcoin. Looking at 100 trillion USD #Bitcoin chart. So far kudos. Yes, 100k very possible by Q3 21, but then sideways until 2024 ! What will Bitcoiners do for 3,5 years as MKT hovers around 2 to 3 trillion MKT value? #BTC becomes stable pristine collateral as day gets built up around it. pic.twitter.com/zergtcallrudm, Dan Tapiero, @tapcap, January 13, 2021. Apart from Tapiero, analysts at JP Morgan had earlier suggested that Bitcoin could reach $146,000 in the long term. According to Tapiero, once Bitcoin hits $100,000, it might trade sideways for up to 4 years before another cycle begins in 2024. Previous corrections have been in the 30 to 40% range. This could see Bitcoin drop to a low of $25,000. As Bitcoin continues to cool off, the fear and greed index of the cryptocurrency market is also cooling off. The metric measures crypto sentiments and emotions from several sources. Bitcoin's fear and greed index is now 78, down from over 95 last month. The chairman of Ruffer Investment Company, a UK investment firm, has dubbed Bitcoin a nonsensical asset that still makes sense. In November, Jonathan Ruffer diverted some of his company's gold holdings into Bitcoin, a move that would have been very profitable. Bitcoin was priced between $13,700 and $19,000 in November. Depending on the price his company paid for the asset, their portfolio would have doubled in the last 2 months since Bitcoin is sitting in the $34,000 range. In an investment review for the last quarter of 2020, Ruffer confirmed that the firm's decision to invest in Bitcoin was due to its beliefs that Bitcoin could eventually challenge gold. He said, "Our underlying reasoning is that Bitcoin is becoming a challenger to gold's standing as the one supercurrency, the thing to own when fiat currencies are kerplunked." He further stated that his company didn't just jump on the Bitcoin bandwagon. The digital asset was subjected to a longish assessment before any reallocation was done. "We have done much work on assessing the danger that Bitcoin is a wrong un. We have been watching it for a longish time, and our judgment is that it is a unique beast as an emerging store of value, blending some of the benefits of technology and gold. Yes, it is a seemingly nonsensical asset, but one that makes absolute sense for how we see the world." Just like Ruffer, several institutional investors are gaining exposure to Bitcoin as a way to hedge against inflation and economic uncertainties. Bitcoin, BTC, at $34,000 may have gained a new convert after billionaire investor Howard Marks admitted that he needed to change his skeptical view. In his latest investor memo dated January 11, Marks, who is co-chairman and co-founder of the $140 billion Oaktree Capital Group, noted that while he was critical of Bitcoin during its 2017 bull run, his son had thankfully bought in. Continue reading on Cointelegraph. Known for its volatility, Bitcoin, BTC, recently fell more than $11,000 over a 4-day period after weeks of soaring price action. Amid a fresh bull cycle, Bitcoin has likely picked up its fair share of new buyers, some of whom may not be familiar with the asset's wild price swings, according to comments from Cheds, a crypto trader and analyst on Twitter. Cheds holds a level ICMT certification, a benchmark showing technical analysis knowledge. Given the recent surge in popularity of Bitcoin, we have many new investors and traders who have not been through any shock events, like that $8,500 daily range candle we just had, Cheds told Cointelegraph. Continue reading on Cointelegraph. Former Ripple executive Stefan Thomas may have made a fortune off Bitcoin, but he might never be able to touch it. The German-American programmer disclosed that he previously had 7,002 Bitcoin, BTC, safely stored on a digital wallet, but that he forgot the password to it. Should he fail to remember the code to unlock the hard drive on which his cryptocurrency stash is stored, his BTC fortune will be locked up forever. Thomas said that previously, he had safely recorded the password on a piece of paper, but that he had lost it. The Bitcoins, BTC, safely stored on IronKey hard drive, would have been valued at more than $240 million with Bitcoin's current market price. Thomas shared with New York Times that he only had 2 guesses left before his cryptocurrency fortune would be encrypted forever and the contents rendered irretrievable. The programmer had already used up 8 of the 10 tries that IronKey allocated to its users when the latter forgot their password. Thomas said, "I would just lay in bed and think about it. Then I would go to the computer with some new strategy, and it wouldn't work, and I would be desperate again." Thomas' misfortune with forgotten keys is not uncommon. According to cryptocurrency data analytics analysis, around 20% of the currently circulating 18.5 million Bitcoin is lost forever, held on stranded wallets that owners have forgotten the digital key to and therefore can no longer access. Being your own bank with Bitcoin. This illustrates that with Bitcoin, the privilege of managing your own funds and the removal of a third-party intermediary also comes at an expense. Technicalities that a banking institution will normally oversee and account for, such as a way to recover one's password, is not provided with digital assets like Bitcoin. The idea behind Satoshi Nakamoto's Bitcoin is after all that no central bank or government can regulate the cryptocurrency. Anyone in the world can own Bitcoin by simply opening a digital bank account, thus providing financial inclusion. But what happens when people experience difficulties with being their own bank? Thomas testified to this and said, "This whole idea of being your own bank, let me put it this way. Do you make your own shoes? The reason we have banks is that we don't want to deal with all those things that banks do." Losing one's own digital keys has been enough to discourage notable investors from owning Bitcoin. Renowned gold bull Peter Schiff is among those who have sworn off Bitcoin, having lost the access to his Bitcoin wallet ages ago. Luckily for Thomas, he owns Bitcoins and cryptocurrencies stored on other platforms. Hit the like button and subscribe to the channel.